What is going on, guys? Good morning. Good morning. I miss you guys. It's been hasn't been a while since I've been on here, but it's been a little bit. It's been a little bit. I'm gonna share my screen because I'm currently in a trade right now, and we're gonna get into it. We're gonna get into it. Let me get my screen shared real quick. Let me just get my screen shared real quick. Where am I at? All right. I'm back on TradingView, guys. I'm back on TradingView. I'm happy I'm back on TradingView. The reason I'm back on TradingView, I'm not happy about you got here, but I am back on TradingView. Um, Let me get logged in really quick to my account. I think the last time we were on here, I told you guys I blew it again. I blew my funded again. But we're back. We're back. I am on another prop firm. This prop firm has trading view capability. That's actually not my password. That's why it's telling me I'm wrong. Yeah, so I miss being on TradingView, man, just because honestly, because my 8 hour time frame. Because it popped me out. You see that? Look at that. Popped me out of my trade last night. See, I took that sell right there, popped me out there. I was going to bed. I was already up too late. But you see, we had got a beautiful 65-point move. So I'm gonna be looking to enter a sell if I get an opportunity today. From about here to here, same move I was essentially looking for, right? Like, um, I would have liked something like this, right? That's kind of what I was going for. Um, I was setting my take profit somewhere here just because it's going to be overnight. I wasn't going to touch it. I actually didn't have a take profit set overnight. I just had a stop loss set. So, kick me out right there. There's a few times I was still getting, used to trading view again, trading on trading view. Um, so there's a few times I just entered double entries. That's why you see me going back and forth here. But I entered a sell yesterday here. You know, entries came in, traded to the next level. We started moving to this level, started getting that, rejection. So I collected my profit. Um, got this, area of imbalance above price. Don't know how soon that we're gonna move back there. Of course, we'll talk about the macros today. We'll talk about, just that type of stuff and the fundamental aspect of it. From what it seems like, yesterday, just kind of getting back up to speed. We've been working on some stuff on the back end. So to be completely honest with you guys, I didn't even plan on trading today, but I was like, you know what? Like I need to be on the YouTube live stream. I need to be trading. I need to be talking about macros. I need to be doing that. So yesterday I was like, you know what? Let's just get a new funded account. Like I said, I had no plans on trading, and I think this is where the edge comes in because I can use the time that I spent learning the macros, all the years that I've spent learning the macros, to actually just bringing myself up to speed with the current macro environment and being able to trade from it. Um, and so, current macro environment. Yesterday, it seems like there was a deal that Tehran brought to the U.S. Um, and from just what I read initially, it's not something that was super pleasing to President Trump, just because something regarding the energy or nuclear deals that were not included within that proposal that was brought. So, however, we just have to always frame things in the mind of how is the market interpreting what's going on, right? And so I think the market will interpret what is going on with potentially a little bit more guidance, a little bit more certainty, because there's actually conversation and not even just from the US, right? But from that other side, trying to make peace, trying to make, come to a complete ceasefire, complete resolution, and a complete agreement for what's going on. So I think it does provide a little bit of more certainty, a little bit more guidance. I was watching a video just, Bloomberg, once you get that algorithm going on YouTube, you never really need to search anything on YouTube anymore. You can just open up, go to your home screen, and it'll pull up all your trending videos for everything you like. But the reason I say that is because I was watching a video on Bloomberg, and there's this gentleman from Goldman Sachs speaking who kind of handles geopolitics, kind of like navigates that landscape. And just a side thought, it made me just think about how a financial firm, a financial institution, hedge fund, multi-billion-dollar asset manager has somebody within the macro landscape solely dedicated towards giving guidance and providing strategy around that sector along because of how it complements the finance. So I thought that was interesting because it speaks to the fundamentals being the force behind the market, and the chart simply just being the mirror of the force behind the market. So um but I knew that was gonna happen. I knew if I went down that rabbit hole, I was gonna forget what I was talking about. So let's see, what was I on? We were talking about the ceasefire. We were talking about the rabbit holes. We were talking about Goldman Sachs, that stuff being connected there. But he was talking about how with just kind of what's going on with the Strait of Hormuz, they just realized how much power they have over not just the US. I think the US is a big player, but just the world. Like I definitely think they realize how much power we have over the US, but also just the world. And so when I was watching that video, it was just good. The way he was framing it, it just made a lot of sense to me. And I think that's why I love the macros as well, because they make a lot of sense. There's nothing you can hide. But it made a lot of sense to me, and just in regards to how this agreement, how this deal could go. And it may not end with the US getting 100% of what they want, but that's not the point of a deal anyway. It's not to get 100% of what you want in a deal, right? It's for both parties to, compromise. So I think we'll end up getting there eventually, especially with the things coming down the pipeline, Fed Powell, ending his term in May 15th. And we got the Greenland stuff still going on that I actually need to bring myself up to speed with. But June 1st was the deadline for the Greenland deal. I'm not sure in what capacity and how that agreement looks in regards to that deadline. But I know it involved NATO countries. I know it involved Greenland, and I know it involved rare earth minerals, which are heavily, heavily, heavily in demand for, once again, not just the US, but the world, but primarily the US, to avoid the reliance that they have on China, that we have on China right now, to produce our technology, our military equipment, things like that are where those rare earth minerals are essential. And in this current AI race we're in, right? It's a race that's moving at a faster pace than any other era in the entire civilization, just because of how quickly things move with AI. And the quicker that we can move on rare earth minerals, the faster we'll be able to innovate. So the reason I bring those up is just because the cyclical nature of price, right? The cyclical nature of the market, right? Even though right now there isn't, there's something going on regarding Strait of Hormuz, regarding US Iran, regarding oil, regarding inflation, right? This is the nature of the market. It's a cycle, right? We're starting here, but eventually this will reach a deal. Eventually this will reach a deal, and we'll go on to the next cycle of the market. What's up, baby? What you mean? What happened, mama? But yeah, so that's kind of, I mean, just to, I feel like I just gave you a quick summary, a quick rundown. Are you guys not even seeing my screen? Wow. Well, I want to sincerely apologize. Good thing most of what I was talking about was just kind of general. Like you didn't really need to see the chart. Maybe earlier when I was showing you the trades I took, you couldn't see. And then all right. That's one thing that actually bothered me when I was trading on TradingView before is okay. Is it logged in or is it not logged in? Because I can't even see the entries that I took. Maybe it's because I'm a smaller time frame. Yep, there we go. All right, so beautiful move nonetheless. Driven by everything that I just went over, right? Just that the more certainty, right? So driven by everything I just went over. If we just look at this move that gold made from yesterday, right? We'll call it right here. This is about when my VXT entry, the system that we used to trade came in. That's not super important. What's important is that you understand why, how we connect the macros, right? To the understanding, to the clarity, to the execution. That's the most important part, right? It's those front two. It's the macros to the clarity, right? And so, um, you see a crazy move like this, a very strong move like this. I won't even see crazy, but you're talking about 103-point move on gold, right? You're talking about one contract, that's $1,000, right? In the matter of less than 24 hours, less than 12 hours, right? And why? Just because there's different market sessions. Different market sessions bring different volatility, right? And so 6 o'clock, 7 o'clock, that's prime Asian session hours. And why is that important? Well, because they weren't able to, engage in the market when they found out that there is, a proposed deal from Tehran to US, right? They weren't that foreign inflow wasn't available yet, or that, the money that they're withdrawing from gold wasn't available to do yet, right? And so we see this fall in gold because of the fundamentals. And once we understand the different market sessions as well, we're talking about very not easy, but simple, just simple understanding that we need to have just around this market sessions and why the different market sessions are important, because then we can really connect the fundamentals to it, right? Because right now you're looking at this and you're like, well, nothing happened at 10 p.m. last night. Well, no, nothing maybe specifically happened at 10 p.m. But that's when we start working through that process, and it's a decision tree, right? You start at the very top. What's happening? How does that create a domino effect to exactly the current part that we're at now, the current state that we're in now? Um, bye, babe. Bye, babe. So we don't have any news today. Actually, we have CB consumer confidence report, which I don't think will have a heavy impact on the market right now, just because I mean, self-explanatory how people are feeling about the market, right? How people are feeling about the economy, not the market, excuse me, in terms of consumer confidence. But we do have the Fed funds rate tomorrow. Expectation is that it doesn't move, right? Expectation that is it doesn't move, which is also a tailwind, a headwind for gold. Excuse me. It's a force field for gold when policy is not expected to cut, right? So I think what the Marcus isn't the Marcus. The Marcus is also in focus for something, and I'm the Marcus. Um, but I think what the market right now is in focus of is just the FOMC statement. Right. So I'm gonna share my screen here really quick just so you guys can see what I'm looking at. Um, I wish I can just share my screen from where I'm at right now. I can't. It's super lame that I cannot. And so I will figure out a better way to navigate Forex Factory or just being back on TradingView. But what I can do is I can share it to you guys this way since we're already on TradingView. But let's go to bless you, baby. Let's go to calendar. Let's go to calendar. I can see what I want from calendar. I only really want high impact news. And so this is what I was looking at tomorrow, Wednesday. This is TradingView, by the way. Like if you just hit the little plus sign before you even click on your charts, all these different options here. And I just went with calendars. and it brought me to the economic calendar, which is fine. I mean, this is all you need to see. I just personally like Forex Factory, my FX book even more than this. But this gives me what I want to see. So this is kind of what I think the market is in focus for right now. Building permits, yeah, red folder, 5:30 news, but I still think the primary focus for the market comes in here, right? Not even just the the Fed rate decision, because like I said, and I've said this time and time again, but I will repeat it for those of you who are watching for the first time, and this is the first time you're learning about the macros and hearing the Fed and interest rates, and yada, 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 yada. And so it's important for you to know that anytime that the market has expected something regarding interest rates, which every interest rate announcement, the market will put out a forecast. Only four times since 2007 has the forecast been not what the market or has the actual result been not what the market expected. That's important to know because we can almost for certain be pricing in how these interest rate decisions, how this current decision will impact the market, right? So that's why I say it's not necessarily the interest rate decision that the market is in focus for right now. It's the verbiage, it's the Fed press conference, it's the additional outlook that the Fed has on the current economy to make said Fed interest rate decision. And then a week after that, right? A week after that, then we'll have the FOMC meeting minutes or is it 2 weeks? It might be 2 weeks. We'll have the meeting minutes, or maybe it's 3 weeks. Maybe they just haven't put the date out yet. Oh, so May 20th, it'll be kind of like a synopsis of why a more in-depth synopsis for why they went with the decision they did, and it kind of also look forward a little bit, right? So this Fed press conference is kind of the next tangible uh evidence we'll be able to hold on to for potentially the rate path, the interest rate path. The interest rate path and understanding what that looks like going forward is important because it helps us project the yield path. The yield path is important because if yields are expected to rise based on what policy is expected to do, if yields are expected to rise, that is a risk-free investment that investors can make. Gold doesn't pay yield, right? Gold's not a yield-bearing asset. So then when yields rise, that's when that downward pressure happens on gold. So rate expectations influence yield expectations. Yield expectations influence gold pricing, right? That's the just a basic decision tree that we can go through for why this is even important and why what we should be listening for the Fed press conference. Now, Fed Powell, who has, just a few weeks left, so I'm sure he's going to relish every moment, but he's not going to come out and say, "Oh yeah, well the way these Fed rates are set up, it's a tailwind for gold or it's not good for gold." He's not going to come out and say anything like that. He's not going to come out and say, "Well, we're not expecting to cut rates because we just don't want to." He's not going to say anything like that, right? He's going to talk about, well, we're weighing, both sides of risk heavily, right? The Fed mandate, which we will always have and stand by, for the good of the American people. At the Federal Reserve is price stability and maximum employment, and we're weighing both risks heavily, right? We're weighing both risks evenly because you look on one, like those are the things that he's going to talk about. And so if when he says stuff like we're in a good spot right now, we're going to see the data come in and we're going to weigh it, like when you hear that stuff, when you hear him talking about the dissenting means disagreement for Fed policy. Let's say Fed Chair A, right? I want us to cut policy. You, Fed Chair B, you want us to cut policy. The other Fed Chair C wants us to hike policy. They're dissenting. They have a different view perspective than you, right? And everybody is able to essentially make their pitch to the group. the Fed members. I think this is really fascinating. It's almost sales for Fed members. Like it's insane. Fed Reserve members are literally salesmen. They sit in there and they sell each other on why they should cut rates, keep rates where they are, hike rates. They talk about the risks of not hiking rates, of hiking rates, whatever their perspective is. And they talk about it in light of the dual mandate. I think it's so fascinating once you actually think about how this actually happens. And you think about it in that way. You think about what I said from Goldman Sachs. You think about how they have press conferences. You think about the cyclical nature. Once you start to think about all these things, you start to see how they connect, and you start to see why they connect, and why there could be no chart without fundamentals, and why Goldman Sachs and JP Morgan and Bank of America and Barclays and BlackRock and all of these different large institutions and large hedge funds are talking about the macros. They're on Bloomberg and they're talking about the fundamentals. They care about tariffs. They're weighing inflation. Once you start to see all of that, why it's important to them, we can start to use how it's important to us, right? And that's where we go from, we stop just trading, we and that's when we go from stop trading charts to start trading context, right? That's what we trade. We trade context, right? We trade context. We let the charts, we let the technicals, we let it simply give us the green light. But it's not the traffic, it's not the entire traffic signal, right? Our technicals, they give us the green light, but it's not the entire traffic signal. So, um, I got a few minutes on here. Man, we've gone over some good stuff today. Um, and honestly, I didn't even go too deep into the current macro environment and climate we're in. I kind of gave a brief overview, a synopsis. I'm more than happy to go over some stuff right now, and kind of just show you. I have a process I go about this now that is more scalable than ever before. So I don't spend much time reading and going looking up articles and finding articles and going to TradingView like I'm on right now and going to the news folders in TradingView and reading through those. Like I'll still do that, but the models that we have now that we're building out um, are much more scalable, much more reliable, and just take a lot of brain traffic away from us from deciding what to do and simply just being able to ingest and uh, execute, right? But let's pull up. Let's see what the market is talking about. And anytime I say the market, I'm just referring to everybody, talking about the market. It could be Dow Jones Newswires, it could be Reuters, it could be Trading Economics. These are all people that I'm when I'm saying what the market is talking about. And so, oil prices so guys, I freaking love the macros. I want you guys to understand how much clarity comes from learning and understanding the macros, right? You've traded before. You traded in the past, you're trading now. You've been frustrated about not knowing where these large spikes and wicks are coming from or why price automatically just started moving fast just out of nowhere, right? Like when I talk about the macros and how much clarity comes from them and how one news article, one headline, and understanding of what the macro environment is like can make all of this make sense. And so let's read it. Oil prices hit $110 and stocks fall on Iran impasse and AI. Okay. And maybe you don't know what's going on with Iran prices. Maybe you don't know why Iran price oil or excuse me, maybe you don't know what's going on with oil prices. Question number 1. Question number 1 you can ask as a trader who has no idea what the fundamentals or the macros were, but you saw this article because you were on TradingView and you were curious on what this button was. And then you looked at and you seen oil prices hit $110. That's the first question you have is why is oil prices hitting $110 significant? Is question number 1. Like listen to these questions I'm about to give you guys because this is how we walk through the decision tree to figure out how we use it to actually execute. We go from macros to clarity to execution. We stop trading charts and we start trading context, right? So the first question you ask as a trader who has no idea what the fundamentals are, but you just came across this article, you ask yourself, why is oil prices hitting $100 significant? That's a great question to ask. Question number one. Question number two, and then we'll go through and answer some of these questions. Question number two, is oil prices hitting $110 significantly high or is it significantly low? Great question to ask, right? Okay. Question number three. If this means oil prices is significantly high, how does that impact the market? Well, if it's significantly high and stocks fell, that means it impacts equities negatively. Why does it impact negative equities negatively, right? Descendant tree, boom, we just keep going down. Okay. I just keep asking, okay, what is the Iran impasse? So now I have to go into this article to answer that, to ask more questions. I can ask just those first three or four questions just by looking at the headline. I can go do research on those first four questions just off the headline, and I promise you, you're gonna come back with so much more context. Let's play it. Let's do the exercise. So I asked the first question, which is why is oil prices hitting $110 significant? Okay, we go do our research. We come back and we find out that oil prices hitting $110 is significant because the higher the oil prices, the more out of control inflation gets, the more out of control energy prices gets, the more pressure that gold prices or gas prices face, the more pressure that consumers face, the more pressure that businesses face, right? All of that creating an inflationary environment. What is inflation? That would be the next question to ask. Inflation is the change in price of goods and services. Okay. So if inflation is a change in price of goods and services, oil prices is impacting inflation negatively, which means that it's causing the prices of goods and services to increase. That increase is putting some pressure on consumers. Okay. Consumers are spending less. If they're spending less, that means other consumers are earning less. If other consumers are earning less, that means they're spending less. Businesses are earning less, right? So we walked through that decision tree. How does consumers spending less and earning less impact the economy? Because the GDP, 70% of what consumers do makes up the GDP. The GDP is essentially the lifeline of our economy. So if we're not growing, our GDP isn't climbing, then we're essentially not growing as an economy. If we're not growing as an economy, then this is when we reach a stagflationary environment. Stagflation is when there's no growth happening and prices of goods and services are rising, right? That all came from that one question of why is oil prices at $110 significant? Right? But we walk through that whole decision tree and we figure out, okay, now we're at stagflation from this one question. I haven't even asked, is $110 significantly high or significantly low? I haven't answered that. But then we ask, why is stagflation important to gold? How does it impact gold? Because gold doesn't like stagflation. Stagflation says there's no growth happening. Stagflation says prices are getting, higher than they need to be, which creates a signal for the Fed to do what? Signal for the Fed to do exactly what they're doing. That's keep rates where they are or potentially increase them. How does that impact yields? Well, the higher the interest rates, the higher the yield return on any risk-free investment, right? Because those yields go up, they're going to get their investment for yields. That's why people invest into bonds, yields, government debt, securities, all the same thing. But that's why people invest into it because it's risk free. They're going to get their money back, right? And so, if yields benefit from interest rates, yields rise, gold falls. Period. That's the decision tree. So then we reach to the point of how we ask one question: why is $110? Why is oil prices hitting $110 significant? We ask that one question. It leads us down the path and the decision tree of saying, okay, we're at a point of stagflation and understanding that how that impacts gold is negatively because it keeps interest rates elevated, which keeps yields elevated, which lowers gold. Now, I could then use that. From there, I just went from question one, oil prices hitting $110, and then figuring out how that leads to stagflation and how that impacts gold. And then I take that and I say, I'm not taking trades unless the environment changes and it aligns with the fundamentals, or the current chart aligns with this current stagflationary environment that is not good for gold, but opportunistic for sellers on gold. That's my framework. That's our framework. We start with the macros, we gain understanding, we find clarity, we trade context. Boom, we execute. Just like that. Just like that. So I'm not getting much movement tonight. I'm a little upset. I woke up and my trade was closed out. I was like, I was afraid, that could happen, but it was late. I was like, man, I need to get to bed. Let me just set my stop loss on this decision-making level, and it just spiked. Beautiful, beautiful trade, though. Like, even though it hit my stop loss, it doesn't bother me, even the smidgest, even though I just brought it up. But just because it's validating, right? Like, we broke. I took this trade. I executed, got about 30 points here. Force field, decision-making level, nature of that decision-making level, price kind of consolidated, then broke strong again and sold off. This is about where I executed roughly in here. Yeah, we came back and touched this level again, but at the end of the day, we still respected this level. We used this level. We traded to this level, and the fundamentals showed themselves to be true. I don't know if you guys can hear, but I'm wanted right now. But yeah, great session this morning. Great session this morning. I miss being on here with you guys. These sessions, I always enjoy these sessions and being on these sessions. Just because I always enjoy talking about the macros. It's fascinating, but not only is it fascinating, but it's useful. Like, this stuff isn't just supposed to be fun to think about and to research. It's supposed to be useful. Right. And that's the most important part there. It's built on a framework and formulas that the technicals just don't have. Well, I'm not going to say that, because the technicals do have formulas because it's based on data. But how did the technicals even get the data to show on an indicator or a candle? Because of the fundamentals. That's the point. It starts with the fundamentals. The fundamentals are the foundation. Okay. And so hopefully today you saw how over here we don't just trade charts, we trade context. We don't just trade the what, we trade the why. And then we understand the why, and then we know where to look for the why, and then we know how to apply the why, and then we know how the why could change, right? We're thinking about the why, and then we're looking at the what, and then we're executing off of the what, but it's rooted in the why. So I know this video will help somebody, because I've been a frustrated trader before too, not knowing what I'm looking at. I personally just like when I have the full picture. So if you're anything like me, then I know this video is going to help you. So drop something in the comments, like this video, share this video with somebody that it could help as well. But other than that, we are working on some crazy things on the back end right now, and I'm not sharing any of them. But you guys just always know we're always looking to bring value to the people that we care about most, and that is the people that we were put on this earth to serve. So with that being said, I appreciate you guys hopping on. I got my little girl climbing on my lap, getting ready for work. Beautiful session this morning. I didn't get any entries. It's been like that on these morning sessions though. So maybe, just maybe, I'll work with a live session tonight potentially, and get on here with you guys again. Cause like I said, I love being on here. It's fun. It's just fun for me to talk about this stuff. So, but other than that, it looks like my entire live stream just got stolen, but I will catch you guys on the next video. Peace.